Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday. We're at October 3rd, 2024. Time about 6:35 p.m. Central Time. Good news, real good news for us. The port strike is allegedly suspended. We're seeing it on the news services come through. I'd like to see it come more directly from the union, but this is what they're reporting at this point. The strike will be suspended until January 15th. Supposedly the union and the employers have reached agreement on salaries. Now they've got to get into job security, maybe what the pensions look like, some of the health benefits. But if they've agreed on the salary, and they were only 11 percentage points apart, they weren't miles apart, this is all good news. Is some of it political? Of course it is. You know, the unions are typically Democratic in nature, and a lot of them want to see Camilla get into office, not the ex-President Trump. I get that. But it doesn't matter. It's good for America. So I want to applaud the union, all right? I know you talk tough. I saw it. I don't approve of everything you're negotiating on, but that's just me. I mean, technology's got to come into play. We're not going back to the buggy whip days. U.S. September non-farm payroll data is going to be released Friday morning. Now, this is the other thing we're going to look at, and then, of course, Israel and Iran. But we've got the economists forecasting about the same, 143,000 new jobs. Jobless rates staying unchanged at 4.2%, very low. Average hourly earnings up about 0.3%, the same they were last time. So if that comes out, is that enough to sway the Fed? In my opinion, yeah. Not for, it'll sway them. Don't go 50 basis points. Then the argument comes out between now, if that comes out that way, which I don't know, but let's assume it comes out close to that. Now the next CPI, PPI, everything leading up to the November 5th meeting, 6th meeting, I guess it is, the day after the election. So just how it works out. As you know, all you need to do is pick up news and go on your computer, go into anything. I happen to use a lot of apps on my phone to read. And all you keep hearing about is the U.S. not wanting Israel to go into Iran to attack the nuclear facilities. I do not get it. I don't know why, and I'm not criticizing it. I don't get it. So if I understood it, I can either say that makes sense or then I can criticize it. What it seems to be is the green light has been turned on. Go after their oil facilities. Go on, take those out. But if you do it and if you cripple Iran in that way, as much as Saudi Arabia, Kuwait, and other members can make up a lot of the difference of that lost oil on the market, you would think that the Iranians, through the Revolutionary Guard, would then attack in the Straits of Hormuz and try to, as they could, take out ships. On the other hand, the U.S. is there with a pretty big force. The U.K. is there. France is there. Is this not the most opportune time for that for Israel? Those are the things that are probably being weighed. The big holiday, the Rosh Hashanah holiday, is now coming to an end. Tomorrow's Sabbath. After that, the doors open. They could go on Sabbath, but I didn't think they'd go over the Rosh Hashanah holiday. And again, Happy New Year to all the Jewish people out there. They call it Lashana Tova. All right. So as we look at what's going on in the dollar index, you were up today, but tonight you're getting a bit of a rally in some of the currencies. Now, I can tell you, I'm looking at how the weekly charts are going. Off the weekly chart, you still have a bearish dollar off the weekly chart in terms of the slow stochastic momentum and a bullish chart in the euro. Yet the markets have been going the other way. Bonds and notes have been getting bids. Everybody's fearful. Very fearful about if something happens in the Mideast, which it will, what happens there. And in the energy, already you're hearing people say $100 oil, $90 oil if Israel strikes and hits that, all right? The one thing that I'm telling clients is you want to stay away from the short side. The exchanges have raised all the margins on a lot of the oil products now. And today I saw a bunch of the currency products had margins raised by the Chicago Mercantile Exchange. So you want to pay attention to that. The exchanges are getting themselves ready by calling for more money for an event. And, you know, I always pay attention to when that happens. So if you look at the S&P, it's hard to get away from the fact the market's still holding on to the gains that we've made most of the year. We're down a whopping 0.75% for the week. Whoop-de-doo, nothing big there. And by the way, that chart was on a weekly close chart, all right? When you come in and you look at the daily chart, you're down tonight about 0.2% from yesterday. The market's got a pattern of lower highs, lower lows. So for the short term, we're in a corrective mode to the downside. And that's because if you take a look at the red line, the 18-day average, I have been preaching to you that I thought the market was going to go down and hit it each and every day of this week. And that's because you had lost, and I'll show you this right here, the bullish embedded reading. Well, you're now there. You hit it tonight. 57.41 is that number, 57.4275. All that means is the market's hit a downside target. It doesn't mean it has to stop here. But when that happens, it's uncanny how often you will go to the nearest main moving average. What about the NASDAQ? You've done it. Had the embedded reading, kaboom, right into it. Notice how you're stalling. The Dow, you had the embedded reading, and I want to show this because it's so darn important. And if you don't take my enhanced Bollinger Band course and you're looking at this, first thing, your stochastics won't look like mine. You have to get from me the formula, all right? And you can change it if you know how to go in. It is not. I'm going to have the top number at 80, the bottom at 20, and I'm going to use an 18 or a 20-day or whatever in between. That isn't the formula. You got to go inside and make another change. And I'll give you what that is, but only if you're a subscriber of mine. Lower highs, lower lows, you lose the embedded reading. Before you go up here, I say you're going to go wherever that 18-day average is, and you're going to hit that. Kaboom. Right on top of it. Now, you've already had it lost in the Russell. As it's dropping, it's oversold, but there's big support. Key word, big one. 2159.5 to 2150.5. So it's the combination of the 100-day average and the Bollinger Band. So am I looking for a big downside breakout? Absolutely not. But I have no reason to be bullish. In the 10-year note, as I told you, since the Fed cut rates every single day, what has happened? You are looking at the yields have been climbing. And that's even in the face of Israel. Now, why? This is an inversion market. The lower you see this and the 5-year and the bonds go down, that means real rates, yields are going higher. Got that? That's how it works. When the Fed cuts again, blah, 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 you typically get your rally. This was the move that took place in front of the Fed, 50 basis point cut, and this is the move after it's taken place. It's that simple. In the dollar index, up in the stratosphere, as the market's now overbought, but when we get to the weekly charts, I hope to do them tomorrow night. I don't want to do them over the weekend on Saturday, so I'm going to do my best to get them out tomorrow for you. I expected to get down to the Bollinger Band. You heard me say it every day in the euro. I got what I wanted today. I'm a happy guy. And now I can see the market trying to bounce off of that, and we'll see what goes on. As I said in the British pound, I thought that the market could make a run back to the 18-day average. Let's get over here, and I'll show you what I meant and why. Why is always important. You lost the bullish embedded reading. It wasn't far away. You danced around it. Today you let go. So the resistance is now the 18-day average. The support's 130.21. That's where you're going to see between here and there probably the short covering that comes into the market. In October micro Bitcoin, I think a lot of traders are amazed that you saw no relief buying, no safe haven buying in these at all. And that's pretty much how it has gone. So we get to the energies, and, again, is the market running on demand? It is not. This is a fear market running on one thing only to get up to this price. It is not because China's throwing money at their market and maybe they'll get more. It's because oil might come off the market and the market trying to figure out how to price it in and what the situation is after. And I want to be key word here. After 181 missiles were fired at Israel. And they were ICBMs, and they were meant to flood Israel's systems. They were meant to get through not only Israel's, but the United States and the allies that were all in the sky, on the ground, fighting with Israel to take these things down. And a few got through. So Israel sees that. Now we'll find out what it is, what they do. And you can't say it. Israel was not attacking Iran. They were attacking the proxies of Iran. That's not attacking Iran, all right? But they did take out a key leader inside of Iran, so Israel's no innocent party here by a long shot. Lower low, higher high. You see that you're up here, and you've got a lot of resistance right through this zone. So you've got to be careful. And in the heating oil market, where you're over the Bollinger Band, it's not a place that I'd tell you to buy it ever. But again, supply. Everybody's worried what happens here. And in the nat gas, you've spent a lot of time at this resistance. You're going to be able to keep going? You might. All right, markets that get up to this and don't break are telling you a story. They're getting stronger than you think until they do that break. And this market now is clearing the 200-day average. Next move's 304.5. Europe is said next year to need a lot of natural gas from a lot of sources. Remember, for all purposes, finally, the end of oil flows and gas flows into Ukraine and for disbursement by Russia basically is over. And Russia gained more ground there. They're gaining more and more as the war is going on from Ukraine. They haven't swept it. You know, it's just going to go the way it is, and we will see what happens here. So you put it all together. You've got the Mideast situation. Don't lose sight that for 20 years, Iran has tried to take out Israel. It's really simple. It's a country that is bent with the head of the country, the heads over the many decades, that is to the destruction and removal of the Jewish people there. That's what the war is about. It's not about somebody's taking property from the other person. That's not what it's against. I'm going to take out the Jews. Okay, so we've got that right through there. When you look at it, what do I want you to take out? I want you to get the free offers here. And here they are in the market. You can see how they sit as you've got the free offers. Now, when you give them a click, what's going to happen is you go to the website, iraepstein.com, just click any of the free offers. They'll come rolling right there on the page. You'll see it as you scroll down the page. Choose what you'd want at the bottom of the page. Put in your name, your email address. We will typically get things out to you within 2 business days. A lot of you go in over the weekend, and we don't do it on the weekend. We'll get to you by Monday or Tuesday at the very latest. So I'm Ira. You have yourself a great evening. Let's see if this world can maybe find a way to get no retaliation and everything ends. I wish it would be. I'm Ira.